I mean, I think some of the areas within the financial sectors do look incredibly compelling. Banks are an area where they're much maligned. I mean, I think we've gone through the classic human cycle of psychology where they've gone from being beloved to despised, hated, and we're now around in basically apathy. You know, people don't hate them in the way they did, neither do they think they're an interesting investment. I think from my perspective, financial stocks, and in particular banks, have a combination of factors that make them particularly compelling. The first is a very, very cheap valuation, and you'd expect me to say that. As a multiple of the assets that they have, assets that are much cleaner than they were 10 years ago, they look very, very cheap. But the other side is the bit that I think people don't talk about or think about, which is the lower levels of risk versus other sectors and stocks. In contrast to many other sectors, banks have been de-risking constantly for 10 years. The regulator has been forcing them to. It's hard to think of another sector in the world which has been forced to so consistently and aggressively reduce risk and increase its margins of safety and buffers of capital. It doesn't remove the cyclicality of banking. If there is to be another economic downturn, banks will be affected, but they are positioned to weather that in a way that many other sectors and stocks are not. And I find that very reassuring, particularly in the context of their much cheaper valuation. I think the areas of the market that look least compelling from our perspective are those that are the most expensive, and they're areas like staples, tobaccos, healthcare. On a global basis, anything that looks like it provides stability or consistency or security is very expensive, and we find that very dangerous. It's not that I don't understand the compelling nature of wanting to invest in a business like a pharmaceutical company, which has a very obvious requirement or need, high barriers to entry, and a great looking business model. Or in a staples business that provides you everyday goods in brands you know. It's a very sleep easy investment. The problem is that sleep easy investments over time tend not to make you great returns. As we know from every other aspect of our life, the difficult choice is the one that makes you the return. If you want to get fit, you can't eat the nice thing and you've got to go to the gym. If you want to be successful in your career, you've got to get your educational qualifications, you've got to work hard, you've got to get professional qualifications. It's a slog. In investment, so many of us want to invest in the thing that makes us feel comfortable and sleep easy and make a great return. Seems unlikely. So today, those parts of the market are the ones that we're probably steering most clear of. Well, with every year that we've gone on over the last 10 years, value has found it tougher and tougher versus growth. I believe value and growth are two sides of the same coin. If humans are humans, if behavioral psychology pervades, if in the short term we've learned a lot, in the medium term we've learned a bit, in the long term we've learned nothing, then I believe over time value will be enduring, and I see the potential for quite a significant snapback, for value as a style to add a lot of value over the next 5-10 years. Will 2018 be that year? Hope so. Don't know so. But over time we're building up a staple of value creation there that we think will come through.